Hello, 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 everyone. Good morning. Happy Tuesday. How is everyone doing? Good morning, Ro. Good morning, Patrick. Good morning, Sterling. Oh, we just had the Red Book numbers come out 5.8%. Still very elevated. Still very elevated. Let's just see what that trend looks like. See, look at that. Look at that. So that's not a bad number. Although things under under the underneath is starting to get really troubling from a breadth perspective, from just an underlying bid perspective. Is getting really interesting out there. What else do we have going on? What else? I have no idea, Sterling. Good morning, Eric. Good morning, Jacob. Good morning, Legion Reaver. Good morning, John. We're going to have some other people slowly filter on in. We need another sip of coffee. So there are lots of birds in the background today. I guess they're prepping. It's going to be 110 here on Thursday already. But it's a dry heat. It's a dry heat. So, just like an oven, a dry heat. All right, what do we got going on today? Because we got to look at these charts. By the way, recording the Futures Edge podcast this afternoon, so it won't be out again today. It all depends on the editing. I have nothing to do with that. But it's going to be recorded this afternoon. Good morning, Royal Palms. And let's see, we already had Red Book. Thanks for Sterling for posting that. We got the Jolts job openings. Did they? Coming out in about 55 minutes. Factory orders. So that's it. Jolts, job quits. So it's a sort of, besides the Jolts numbers, it's quiet the rest of today. So we just get to look at pure price action for the most part. S&P map. Chips finally, except Intel, finally taking a breather. Oil getting shellacked. Mega caps slightly down for the most part. Again, this market has got this weak undertones. It's just not looking good below the surface. It's like painting on a rotted, fresh paint on cracking drywall. Healthcare is the only thing up today. And basic materials and energy, financial breaking down. Commodities overall are getting really hammered. Lots of stuff. Fed watch. Now we're back to 2 cuts. First one in September or November, and another one in in December or January. Starting to price in easing again, fear and greed, back to the lower end of neutral. Market's still very, very expensive. Nothing really before the open today, and we got CrowdStrike, Hewlett Packard Enterprise after the close, but nothing market moving. Tomorrow morning we got Dollar Tree, which is what I'm really interested in, and then tomorrow after the close we got Lululemon. So let's take a look here. Let's take a look because this gets really interesting. Let's first say good morning to Anissa. Hello, Charles. Good morning, Heinrich. All right, some more people coming in. Hey, Dark Screen Sleep. Thank you for tuning in. So yesterday, we come back down from yesterday's early high, came back down right to 62.5. So yesterday's low, and then a key close, which would also be if we close down, if we close down below the Thursday, May 30th low. That's my early warning sign at this point. That is my early warning sign. And especially if we close below this 52.46 area, that would be a low close on that pullback that we've bounced from since. It would close below the 62.5, where we bounced off the 50 in the end of the month window dressing. And then we'd start looking probably for a bigger pullback. And remember, the next key area is this 51.15 area on a closing basis. See how we're just holding the weekly rotation zone right here? The weekly rotation zone. So we came back down to the bottom, rotated back up, forming this massive double top, potential double top, may never trigger. And now it's trying to cling on to this with severely waning momentum. So this thing's really got to get a fire under its butt, or I'm watching for rollover mode. And I'm paying attention to yesterday's low in that 62.5 level. Then it would be a retest of the 50, and if that broke, watch out. Next major is at 51.15. Then we got the magnet price right around 5,000. So for today, that's the macro. That is the macro. Key area I'm pretty much watching is just the 50% harmonic from this little low to high area. That's my major support level is 52.59. My minor support level is 52.67. And on the resistance front, the good old resistance front, I'm going up to 5,300. Minor resistance going in the open is 52.85. So those are all the levels I am looking for in the short term. But the long term, as I said, not trying to eke out the final little bit of price action. As I've been mentioning, bills are super attractive now from a lot of positions, from my perspective, that you don't want to have or you don't want to carry longer term. Bills. NASDAQ also yesterday down to that 62.5. So this is from the lows on Friday to the highs yesterday, coming down to 62.5. So yesterday's low price, very key, is 18,435 area, 434. That's key on a support and on a closing basis. That's what I'm paying attention to. Because you got the same thing with the NASDAQ. NASDAQ still technically has the potential double top in play. Waning momentum, weekly cycles rolling over, trying to hold on that rotation zone. But that's the key level for any more significant breakdown play. Resistance is adjust this level. Going into the open 18,675 area. That's where we're looking going into the open. The key support at this point, the support I'm really looking at today is right around 18,485 to 18,500, and then this 18,434 if it breaks below that. Again, the resistance 18,675 and then 18,740 to 18,750. Biden won't rule out using forces to defend Taiwan. I'm sort of torn on Taiwan because I think that's one we might have to, at least from our strategic level for our country, might have to be at least somewhat involved in should it happen. I don't think we should be involved in Ukraine at all, but Taiwan, because we have not shored up our chip manufacturing business here, and that can have major ramifications. Now, long term, I don't want us involved in anything. But Taiwan would get interesting, and he's just going to piss off China with that statement. All right, let's see what else. Dow, it's not really yesterday's low. I mean, you can look at that in a little short term. You can still look at it. It went a little farther down to 75, but the key level I'll be watching on a closing basis is this 48,425 area. And then if we have the massive potential double in the Dow. Also, you see the Dow really starting to weaken here. Could be interesting because if it gets below this low from middle of April, triggers the double top, we could easily see a return to the 200 week. That's really about it. Your key resistance just for today. Key resistance area is about 38.8 to 38.825. Key supports coming in about 33.350 to 38.350 to 38.400. The Russell looking like there's no double here. But this can get interesting. What would be the target if it starts breaking below about 2027? we're looking at a first target area right around 1983. That's the first target if we do start breaking down in the Russell. And then the next target would be back to the 200 on the daily basis, this 1940 area. Very strong resistance about 2065. It's coming into a strong support area right around 2041. But if that doesn't hold, you got 2031 and then kiss it goodbye. I agree, Richard. Completely agree. VIX might be trying to put in a higher base here, so I'm keeping an eye on the 13 handle. On any significant sell-off, it's the 14 handle. The DAX, this is roughly, from my perspective, close enough to lower the stop. Just missing that first target area and bouncing, holding the channel. So this is where I definitely, with that bouncing off the 50, being close enough to that first target area, would definitely be lowering down a stop or an invalidation point. Notes, just getting, I mean, this is super fascinating. Super duper fascinating. Because tons of strength in the 10-year. Going to be paying attention to a close above 109.31.5, because we could significantly run up, and yields then the key closing yield price. Now this is going to get interesting because of the channeling nature of it, but 4.3 on the closing basis, because then it loses the 200 again, and poof, this mark is pricing in like a lot of weakness. But interesting enough, stocks are still trying to hold up. You can't have it both ways. Recession, it's actually getting pricing in more and more recessionary stuff, except for the broad financial markets in stocks. Dollar index getting hammered yesterday, invalidating the little mini double from before, but setting up a more potential double, which may never trigger. Because if this loses this key support area, this 103.50 area, gets real interesting in the dollar. Also, from a channel perspective, from the longer term channel perspective, you see here starting to, if it can't regain this channel, going to start shifting viewpoint on the dollar. But right now it's got a lot of overhead resistance to regain. I'm not using the back adjusted one on that, Sterling. Crude also fascinating enough. Pricing in starting to break down, recessionary, closing below the 62.5. Let me take off this one. Closing below the 62.5 yesterday. Hit that 75, but we could easily return to $70. Now remember, on that weekly, this would be the first break. If we got to still finish this week, but this would be the first breakdown of crude below the weekly 200 since back in February of 21. We still have a lot of the week left to go, but I'm paying very close attention to crude. Now, we might get a bounce, but with the rotation zone going down, we might be setting up at some point for a bounce. We have a lot of overhead resistance now. So crude is at least in the shorter term, is looking in to sell the rallies. Gold, really not much to talk about. Gold is still holding up pretty nicely. This is just getting into a flagging pattern. So we could see another push lower in there. Now, silver still has not triggered the double. But watch today where the double top, watch today where silver closes. Watch today where silver closes. Copper, still. Now we do have a little mini potential double. That's the only saving grace in copper right now after hitting the second target and that 50 area and the prior support. So this is a very key area to watch. If this starts breaking down, copper could see some, and it's also the weekly rotation zone, we could see even a bigger pullback to possibly 4.35, 4.36 area. What else are we going on? Yields coming back a bit in the yen. So that's starting to pull back finally. The interesting enough, close above that 62.5, but a key area I'm watching is this would be getting into a major potential topping area if we get above 104.05. The markets are starting to price in a lot of disinflation broadly with the commodities and these pullbacks, even now with the yen. So it'll get interesting, but we have no real sign of that. I mean, we have some commodity futures, but we have no sign of inflation starting to wane yet in Japan. What else? Euro. In order for me to get really starting to get bearish on the dollar, I have to, at least in the short term, Euro's got to close above 109.30 area. The spiders, yesterday, a down close above the 62.5. Don't like that so much, but how did that? Let me fix this. Sorry about that. But yesterday's low is very key in the spider. Until then, 525.76 is the first level support. Then we have about 523.90 to 524, and then yesterday's low. On the resistance side, 527.55 and then 529.39. The Qs did not close above the 62.5 yesterday. 451.82 is my first level support. Let me put on the harmonics. Then about 450, we have this key close still from Friday, and the 37.5 harmonic around 450.75, and then 449.34. Resistance I've been looking at is 454, and then very significant resistance at 455.58. Bitcoin, not much to talk about. Really not much to talk about there. Take a look at some other stuff. Tesla, nothing to talk about. Nvidia, in potential double top territory. If it trades above 1,180.39, it's off the table. Just keeping a close eye on this because we are setting up for a potential divergence even if it breaks to, what were the highs here? Highs 1158.19, trading 1151. So even if it ekes out a new high, we'll have a pretty significant divergence. But Nvidia is just holding up this market. That's the scary thing to me. Is there an upward sloping neckline? As again, I would not trade this as a head and shoulders. Would not be trading that as a head and shoulders. Let me take off this to clean up the chart for now. The key targets, if we break down, key target area, first one would be 103.20. Then I'd be looking at 102.42, and that's very key support. That right around that area is very, very major support. That's how I would structure any pullback in the dollar index. Again, a lot of these commodities are starting to price in a significant recession, but the market's not. Oh, it's going to get interesting. Oh, and what if What if we have a market that starts crapping out before the election? I'm really wondering. I'm really wondering. That would get interesting, wouldn't it? That would get interesting because you know what? I think the numbers are getting out of the government are getting massaged to the point. All right, you might be able to try to keep the financial markets propped up, but it's numbers don't equate reality. Look around. The numbers don't equate reality. So the map is not the territory. Remember that. And they are drawn there. Let's put it this way: they're redrawing the coastline without and if you walk along that coastline, you're like, that doesn't match what's happening. That doesn't match the map. Oh, but the map says this is what it is. But I'm walking along the coastline and it's not. Or I'm flying over the coastline and it's not. You're showing me a map that doesn't show me what actually is. The map is not the territory. All I'm saying there. Good old Apple, nearly up to 87.5, so the full blown sell off recovery nearly completed there. But Apple's also got some pretty significant waning divergence up here. Again, none of this has to trigger the longer term patterns yet. But I am really paying close attention. I'm also paying close attention to potential front run patterns. Potential front run patterns. Have I fully addressed? For the most part, I still don't like getting up at 4 a.m. 4 a.m., it just doesn't seem natural. But doing it. Well, if I didn't do this live stream either, I'd probably get up slightly later because I don't have to do as, but I want to go through stuff and really look it through the news feeds and see what else is out there because I don't want to really at least consciously put out incorrect information. So, yeah, TDA. Once Schwab took it over, I think I have 17 cents left in my TD Ameritrade account. Goodbye. Did not like what was happening under Schwab. Goodbye. Had TD. I mean, Think or Swim. I had Think or Swim for many years, and it was not the same. Let me just put it that way. Despite no immediate risk, inflation and market volatility remain concerned. Yep. Any thoughts on the pair trade XLPSPY? That could be interesting. That could be. Let me look at that weekly. Yeah. If you're setting up an XLP SPY, I could definitely see a shift there. I could definitely see that as a pair trade. Setting up for a longer term. I mean, look at that. That could really, if the broad market starts pulling back, but then you need to get into consumer staples. Oof. That could be definitely something that could be traded around a core position. Definitely around a core position. That's a good one. That's a good one, Christoph. Yeah, the number of problem banks is rising slowly. Well, isn't that the way things happen? Slowly at first, and then all at once. Slowly at first and all at once. Let's take a look at the S&P going into the open. S&P going into the open. If it can break through this little minor resistance shelf, the next minor one is this 52.92 area, and then that 52.98 to 5300 to the upside. Support, the area I'll be watching into the open is about 52.80, and then we go to that 52.72, and then the major key thing, if we did break down, is 52.60. So that's where we sit there. I got out of Schwab as well. I'm giving interactive brokers a try. Yep, I like interactive brokers. I mean, it's not for everyone. There's not a lot of hand holding. It's not a lot of hand holding. Are you quoting The Great Gatsby? The map is not the which was the quote for The Great Gatsby? I didn't. Maybe I did unconsciously. I haven't read that book in years. Oh, so pretty negative tick, minus 1,000. So we're gonna have to see if where this thing stalls out on the little push up with a little bounce and tick. But then I'm going to be watching for the rollover in the tick to see how it retests that minus 1,000 area. All right. Again, overall, I'm getting into very cautious mode overall with the markets. So I was relaying with my stuff with T-bills. Again, I could care less if this thing ekes out a new high. Could care less at this point. Over 5% is pretty much a risk-free over 5% return is just fine. Just fine for me. Oh, we want to slowly bankrupt this first and then all at once? Okay, there we go. I must have not realized I was quoting that. But isn't that how every sort of things happen? Slowly and then all at once. Time for the summer chop fest? I don't know. Yeah, we could. We could just go into a chop fest here. Or we could, it would be interesting. It would be interesting to see what happens if the markets do trigger some of these bigger potential breakdown patterns. Again, they're still potential. Now, would that be deadly to the market if it returned to 4,600 in the S&P? No. I mean, if you look at this, still off those, it's still above the October lows, but that would start getting interesting going into an election. All right. But we don't have anything major trigger yet. That's why I'm paying very close attention to these key levels, because it's getting harder and harder to push the boulder up the hill. With that, I shall talk to everyone tomorrow. Have a wonderful, wonderful trading day. Bye for now.